We are 2 hours into trading. It's Monday, April 5th. Let's take a look at some of the recent picks, then let's take a look at the market, then let's find some new picks. Today, I'm also going to talk a little bit about trading gaps higher. So, first of all, recently I have highlighted MGM. That was in a video on Saturday. You can see beautiful move higher here. That was a pre-earnings play that we were going to try and execute this morning. This stock has a tendency to rally into the earnings announcement more than 75% of the time over the last 3 years. That's a very nice statistical edge that we can use. We sell out of the money bullish put spreads, try and take advantage of time premium decay and that seasonality. Not able to get that trade off because the stock ran. I also highlighted AMAT in a video yesterday, Sunday. You can see how that stock is trading higher. It's a little bit off of the highs, but still very strong. I don't want to chase this one. I feel that some of these gaps are going to be filled in, and we'll get a nice opportunity to buy that stock on a tiny little pullback. I also highlighted SUNW. I still like that stock. You can see how it's holding the 50-day moving average, holding half of that green candle. We want to see it spend a couple of days here. When it does so, it should start to gather some momentum. You can see that it's got plenty of upside, so I like that as well. This sets up pretty well as a bullish put spread candidate, and you can see earnings were there and nice reaction to the earnings announcement. Look at this market go. We are at a new all-time high, and you can see how we broke through the resistance last Thursday. Big candle up, closing on the high. Friday we were closed and we got the unemployment report. 916,000 new jobs created in the month of March. Very, very strong jobs report. And that's one reason that the market gapped higher and it's continuing to move higher. Now we had this downward sloping trend line that was breached to the upside on this long green candle. You know I've been bullish since I saw that pattern. We bounced off the 50-day moving average. If you don't believe me, you can go back and watch all of my prior videos. I also like the fact that this dip that we had here was longer in duration and deeper than this one. And that tells me that buyers were more aggressive. And that's why you get this cup and handle type formation. Not quite a cup and handle. You'd have to have a high up here, but it's close enough for me. The point is the same, that buyers are more aggressive, and then you get this nice breakout. Pete, how high could we go? What's the target? When can we reach the upper limit? Well, if I connect that bar and I connect the top of that bar, you can see this upward sloping trend line. It's going to come into play right around 410. That's a significant price point because if I take the high here and the low here, that's approximately 14 points. And a measured move would be a rally from here, 14 points higher. That takes us to about SPY 412. So somewhere around that 410, 412 level on the SPY, I think is where we start hitting some resistance. This would be the 3 steps forward, then we take 2 steps backwards. That's been the pattern. 3 steps forward, 2 steps backward, 3 steps forward, 2 steps backward. So I am bullish. I like the market. We're going to be looking for some bullish trades. Before I do that, I want to talk about day trading and day trading patterns. When I get a gap higher to a new all-time high or a relative high that's been intact for a while, I don't buy these rallies. I don't buy that move. I sit and I wait and I watch. And oftentimes, more times than not, you are going to get a reversal off of that initial move. And while I'm waiting and watching, sometimes you'll get a pop like this. I'd say probably about 1/4 of the time, you're going to get a move higher like this. 3/4 of the time, you'll at least get a horizontal price movement, a compression, and the bid will grow and grow, and you'll have time to evaluate stocks. The other remaining times, you'll get this gap up, and then all of a sudden you start leaking oil, and you'll have a reversal. Sometimes you come in and fill in the gap. Sometimes you fall just short of it. Sometimes you get a complete reversal where the market will take out the prior day's high. That is a sign of very strong selling. So I don't mind just sitting and waiting to see how this turns out because I don't want to be the fool that comes in. You get this big, nice rally and you start gobbling up stocks By the way, every stock is up. All boats rise with the tide. So you don't know the real McCoys, the ones with really good relative strength, until you get some type of market compression or a market pullback. So you start chasing stocks out of the gate, and then you get one of these reversals, you are going to be left holding the bag. I don't want that happening. I would prefer to just let this play out. We could have a little bit of a buying climax in here. We'll see. This has been a nice move higher. I am not bearish at all. I'm very, very bullish on the market. My point is, you don't have to chase, you don't have to rush to try and take advantage of these opportunities. If you wait patiently and you wait for the price patterns that you like, you're going to have opportunities to make great money. And when we did have this nice move higher earlier this morning, I was looking at stocks that were relatively weak, and I was able to find a couple that looked attractive to me. Actually, quite a few. GS was one. Let's take a look at that 5-minute chart. That had a nice intraday reversal. And DQ was another one. I'll put that up. You can see this one I really like because this one was below the 100-day moving average. Small little bear flag right there. Take a look at that. You can see how this stock bounced with the market. Upward sloping trend line. That's a bear flag. That's your short right there. Really nice one. GSX was also another stock. Look at how steady that selling pressure has been. Go into the daily chart, and you can see how it's taking out horizontal support. So even though I didn't catch this move, that doesn't mean I'm not going to make money today. I'm going to do it on my terms. I'm going to wait for the setup that I like. Typically, these patterns, you'll get the run up and then you'll get a lot of sideways movement, a compression, if you will, for 2 or 3 hours, very, very possible. And then in the last hour, hour and a half, you'll get a move. Sometimes it's to the upside, sometimes you get a retracement. So we'll be watching for the 1OP indicator to see what it's telling us. But these are just day trading opportunities that I'm talking about right now. On a swing trading basis, this market is hot. We are in the sweet spot. We can have strong economic numbers, and we're getting strong economic numbers. ISM Services came out this morning. I believe the number was 63.7. That is a super, super strong number. We had ISM Manufacturing last week. Excellent number. This economy is opening back up. 4 million doses of vaccine given Sunday. So you can see that everyone's getting the vaccines. The economies are reopening. The Fed is sidelined. They're not going to raise rates. This is a sweet spot. I think that we continue to move higher. But just beware, we get a little overheated. 3 steps forward, 2 steps backwards. Enjoy this rally while it lasts. When the momentum stalls, start taking your profits. Let's find some stocks that might present good opportunities. Oracle. And I'm going to go to my pop bull search and we'll take a look at the stocks on it. Oracle, very, very nice. It had some news today, some litigation news against Google. So you can see how that stock is really pushing, taking out that high. WBA looks very, very good. Also breaking out to a new high. Got a little pullback in here. There's your bullish flag. This is where you wanted to get in, but you had earnings standing between you. This is a nice earnings reaction. All the airlines are doing really well on an economic rebound. Walmart, love that breakout above the 200-day moving average. Not crazy about that weakness in here. Retailers in general should be doing very well. Everybody's got stimulus checks in hand. Amazon's also a retailer, also considered tech stock. I like Amazon. In fact, that's the one that I'm going to highlight for a play because the train has not left the station yet. And you can see how you've got a little bit of a cup and handle in here and a nice breakout here above the 100-day, above the 50-day, above the 200-day. I like Amazon. Now, if we go in, we could take a look at the option chains, and I would draw a trend line right like this. Let's drop it for you so that you can see it. I click on that low, and I click on that low. There's your upward sloping trend line. Comes into play right around 30.60. Hover over the E, earnings on 429. So I have to select an expiration before 429. April 26th is one of the expirations that we can take a look at. April 23rd, excuse me, and I'm going to go down to the 360 strike. 3060 is the number. So I'm going to click on the 3060 puts. I'm going to click on the 3055 puts. I've got $5 between the strike prices. That means I want to get $1 for this spread. If we get a little bit of a market dip sometime today, this spread could certainly be in line. So let's repeat that. April 23rd expiration, Amazon is the stock, selling the 3060 put, buying the 3055, doing that for a $1 credit. Let's take a look at that stock one more time. And here you can see, got the nice upward sloping trend line, breakout through multiple major moving averages, also lending support. Stock looks good, a little bit of a cup and handle formation, and we are still way out of the money down here, leaning on that upward sloping trend line. But we've got all these moving averages that will also help us as well. I like that trade. If it expires worthless in the next 4 weeks, 3 weeks, we're going to make a 25% return. 5 points between the strike prices less the $1 credit I receive means that I have to put up $4 for that in margin. That's also my maximum risk. I'm bringing in $1 in credit. $1 divided by 4 gives me that 25% profit. I like it. And I think Amazon is going to continue to move higher. Again, another retailer, stimulus checks in hand. People are going to be spending that money. An estimated $2 trillion that consumers have on the sidelines. The savings rate in the last year has been very, very high. I think that there's going to be a lot of pent up demand for the retailers. And I also think some of that money is going to find its way into the market. That's all I've got for you today. Trade well. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.